Warm welcome to all the dignitaries on stage. May I now request Mrs. V.R. Iyer to kindly present a floral bouquet to Dr. K.C. Chakrabarty. Thank you, ma'am, and I request Mrs. Iyer to kindly deliver her welcome address.
Good afternoon. Dr. Chakrabarty, Deputy Governor, Reserve Bank of India, Mr. Kamath, Chairman IBA and Chairman Punjab National Bank, distinguished and eminent bankers across the country, members of the press and media, ladies and gentlemen. We just received a communication from Sri Rajiv Takru that because of official exigencies, he is not able to make it. So this will be the concluding session of BANCON 2013. It gives me great pleasure in welcoming Dr. Chakrabarty here from Reserve Bank of India to the BANCON 2013. Dr. Chakrabarty requires no introduction, absolutely. But for the sake of completing the formalities, I will just briefly touch upon for the benefit of the audience. Before taking over as Deputy Governor in 2009, Dr. Chakrabarty was CMD of Punjab National Bank, and prior to that, CMD of Indian Bank for over 2 years. He was also the chairman of Indian Banks Association for a brief period before assuming charge of officially of Deputy Governor at RBI. You all know he led both the banks from the front and brought a turnaround in both the banks he headed. His current assignments at RBI include guiding and overseeing the areas pertaining to rural and urban cooperative banks, information technology, payment and settlement systems, customer services, human resource and personal management. He represents India in the Committee of Payment and Settlement Systems constituted by BIS as a member. He is also the RBI nominee on the Board of Directors of NABARD and Chairman of the Institute for Development and Research in IDRBT. He is known for his outstanding academic credentials, a first rank holder in MSc Statistics and a doctorate in Statistics from BHU. Dr. Chakrabarty has wide exposure in banking operations and administration. He is known for his very vocal comments on various facets of banking. Financial inclusion is very close to his heart, and he drives the same very, very passionately. The banking fraternity always seeks out to him for guidance. So this year's theme of BANCON is Bank of the Future, gearing to meet the emerging environment. Today is the second day of the BANCON. Yesterday and today, we have had the benefit of address by our Honorable Finance Minister and also the Governor of the Reserve Bank of India, besides a number of useful panel discussions. So the FM in a speech exuded confidence that the economy will pick up in the second half of 2013-14 and will grow at around 5.5%. He also said that fiscal deficit can be contained at around 4.8% and CAD can be narrowed down to $56 billion, although he agreed that inflation continues to be worrisome. He disagreed that monetary policy is the only method to control inflation, as food inflation is the main cause and monetary policy has not much of an impact. He did raise a concern that only 28% of the retail credit is channeled to rural and semi-urban areas, which constitutes almost 87% of the population. So he advised that all banks should majorly focus on financial inclusion and also extending credit to the MSME sector. He also made a mention that banking industry is getting increasingly commoditized, with most banks offering very similar products. Hence, he indicated that there is a need for the banks to innovate to offer a differentiated proposition. So, Governor, in the evening session, he came around 4 o'clock. He agreed that monetary policy is a blunt tool to control inflation and said that there were very few other options available. He also indicated that the only way to contain food inflation was through supply, and that supply cannot be increased in a short period of time. As bankers, we did raise a point that since the country is totally dependent on infrastructure for driving the economy, it may be better to allow the bankers to issue long-term tax-free bond as an option. He did indicate that he would look into that aspect. He said that as India is facing many problems internally, we should focus on resolving these problems instead of unduly worrying about the fiscal tapering by USA. This was in response to the query raised during the question hour session. So our main plenary session was on banking in uncertain times. It was very well received, and some of the things which came out very clearly was innovation is a very important area in every segment of the banking, and especially innovation in technology is an important for any successful business model. And technology should be embraced by all employees and should become an integral part of the process and teams in the bank. He also said it also emerged that innovation can be done by all the players in the industry, but there is a need to ensure that there is a level playing field in terms of regulations, and that there should not be any regulatory arbitrage that should get encouraged in the process. Thereafter, we had panel discussion on customer-centric retail banking model, cracking the SME riddle, and also accelerating financing the infrastructure to boost the economic growth. There was also a very good debate on the mass market opportunity. Is it real, and how to capture the same? Today morning, we had a very interesting plenary discussion on building capabilities to compete in the emerging environment. That was very well received. And in the afternoon session, we had panel discussion on digital strategy as a means to tap multi-channel behavior, and the panel discussion for growing up human capital. Mrs. Usha Thoret was there as the head of the panel, and we had Mohan Das Pai besides other members. So we had a very, very interesting deliberation and discussion, and many of the action points have emerged. I'm sure the entire audience will be carrying over a good haul of many takeaway action plans for their respective bankers. Sir, we are eager to hear you now. I will not summarize the whole discussions, what happened in the last 2 days. So I leave the floor to you as of now, sir. Thank you.
Thank you so much, ma'am, for the welcome address. And now may I invite our honored guest, Dr. K.C. Chakrabarty, Deputy Governor, Reserve Bank of India, to kindly deliver his special address to BANCON 2013.
No, it did not start from here. It is make it start from here. Yeah. As a preview or fine, and no problem. Yeah, for me no problem. Don't worry. Good afternoon to all of you. Mrs. Vijay Lakshmi Iyer, the Chairperson and Managing Director of Bank of India and host of the BANCON, Mr. K.R. Kamath, Chairman IBA, Chairman Punjab National Bank, and Mr. Arun Srivastav, other friends. I see a lot of chairmen, EDs, galaxy of people from the financial segment, my colleagues from the financial sector, banks, representative from the print and electronic media. Of course, I must not forget the entire board of Bank of India board members who are present. I see my old friend, Mr. K.K. Nair is also here. And now, let me come that, you see, I am really thankful to Bank of India and Indian Bank Association for giving me this opportunity to talk to you on this. Now, when I was given this invitation, I saw that as Mrs. Iyer says, Vijay Lakshmi Iyer, huh? She is Lakshmi, so that is why dealing with the money. So that's the thing. So she told me, she said that you are all discussing banks of the future. And I saw you have a galaxy of the speakers, starting from our Finance Minister, Honorable Finance Minister, Governor of the Reserve Bank of India, lot of other people. When I was started thinking, I see that being a banking supervisor, today I have no luxury to talk about future banks, banks of the future. I am more concerned of the future of the banks rather than the banks of the future. And the one factor which is today affecting the future of the banks is the credit administration and non-performing advances. And that is one topic I thought that, you see, there is a lot of heat. People are saying banks have become useless. The bank people, they don't know how to appraise the credit. Then I thought that being, people who know me, I do a lot of analysis, I have a lot of data, and this I was working for the last few months on that let us see what is happening in the system, understand. You see, purpose is self-criticism, where we have gone wrong, and what we should do to correct that thing. And that's why I will give you, and it is the analysis of the last 2 decades of the credit management. And that will give many of the topics which we have brought. You see, financial inclusion, retail banking, you see, corporate banking, many other things. But we have to understand, and the topic rightly which I have taken, if the future of the banks have to be secured, and there have to be banks of the future, we have to control the NPA MINAC in the banking system, and that's why we have to look the entire facet of credit administration in the bank. So I am talking of making a presentation on the 2 decades of credit management in banks, looking back and moving ahead. It is not that this analysis is not to only criticize, but what should we do so that we can go ahead and we can really say, then we can talk of what should be the shape, structure, policies of the banks of the future. So let us first concern more on the future of the banks. Now, you see, look, credit risk is integral to the banking business. I don't want to take much of your time, though I know I have some luxury that I can take a little bit more time. So no problem in that. So, you see, when banking was simple, lending decisions made on impressionistic basis. You see, look, people know that banks used to give the loan only from the head office, and very few people are given the loan, and the lending decisions, unless the bank management want to give somebody bad loan. You see, the way today happens in many cooperative banks, not all. The professional, this has gone wrong. Otherwise, bank credit cannot go wrong. Credit risk management was straightforward, and information requirement was minimal. As banking became diverse, complex, and sophisticated, risk increased, became transmittive and contagious, but credit risk management lagged behind. The problem, what has happened, credit risk management has lagged behind in the banking system. In fact, where it has reached, it has not proceeded further. An information system, that is second key issue, is that you have no data about NPA. You have no granular information about NPA. You don't understand why the NPA is created. We need to address, and I'll come this issue again and again. So my purpose is, objective is examine how Indian banks have dealt with credit risk over the last 2 decades. Now, credit risk has to be looked at the regulatory framework. How the regulatory framework has evolved for the last 2 decades and what has happened. And there are many things wrong has happened in the regulation also, and which has bring us to this particular situation. And partly, when I come, I will say that you are also partly responsible to this type of regulation. Because what we call market capture by the regulators are captured by the market forces. Trends in gross and net NPS. What we are analyzing is gross and net NPS, trends in slippages, write-offs and recoveries, trends in restructuring, then dwell on some facets that have a bearing on the asset quality of banks, risk management and primitive information system, GDP growth, size, segment and analysis, general governance and management structure, credit appraisal and monitoring standards, and way forward for the regulators, policymakers, banks and bank customers, what we should do collectively do so that the future of the bank remains secure. Now let me first come to the evolution of regulatory norms and prudential norms for NPA. You see, before 85, the NPA was purely the job of bank management and the auditor. I don't think the regulator was ever coming into picture. You say that you decided the auditor, let them find out whether provision is to be made or not, and it is the management job to tackle the NPA. Because it is the bank's vested interest to control the NPA. There was no regulatory or prudential norms. But as and when system started growing, and complexity system is growing, it was felt that there need to be prudential norms for the NPS. And the first time it was introduced in 1985, which we call the health code system, 1 to 8 health code, some idea how the asset is classified and how to control them. Then you know that 1992 reform, prudential norms on income recognition, asset classification and provisioning introduced, and first time the income recognition norm and mathematical formula for calculating the provisioning was introduced. And income recognition norm started with, if you remember, 4 quarter, it was brought down to 3 quarter, and then it was made 2 quarter. 90 days is much later. It is 2 quarter. It stopped there by 95, 96. Restructuring guidelines were introduced. Assets were the terms of the loan agreement regarding interest principal. I don't want to know that this is the thing. On restructuring, the loan is to be classified as substandard. 90-day norm came in 2001. Stringent, and there was so much resistance from the bank. If 90-day comes, banking system will collapse. Nothing has happened. 90 days norm came only in 2001. And specified asset classification treatment of restructured accounts were tightened on 2001 to 2. When you say lot of project, evergreening, those concepts has come. So these were also tightened. Now, you see, look, one thing what I'm saying, when you give the data, I will show you. Whenever the NPS goes up, you say that regulation needs to be made more relaxed. Where the data says that whenever regulations are tightened, the asset quality has improved. You see, it is just the opposite. You see, if you tighten the regulations, prudential norms, then the asset quality improves. And that's why when I show you from 92 to onwards, there is a steady decline of the NPS of the bank. So first thing that what we are saying, that if you are having a problem of NPA, don't rush to the regulator or the finance minister that NPA norms to be liberalized. You ask for more stricter NPA and prudential norms. That's the first thing. In fact, we have no reform in the prudential norms in between 2002 to 2008. And thereafter, there is only relaxation. There are only relaxations or flip-flop. You see, for example, we have a good number of the floating provision, that banks on their own should make the floating provision. It was said that you cannot utilize that, banks stopped doing that. Then we had sometimes that provision coverage ratio. We said 70%, we have withdrawn. Dynamic provision, we talked, the circular still has not come. It is a flip-flop approach. And worst thing has happened in 2008, the restructuring guideline. And one time, exemption on restructuring guideline on the retrospective effect has killed the credit quality in terms of the restructuring. So what I'm saying, we must understand, prudential norms is not to kill the banks, but the prudential norms tightening is to protect the future of the bank. So if you want to become future banks, banks of the future, you must welcome more stringent regulatory and prudential norms. It is in your interest. That's the first point, what I thought that I will make this. Now, let me come quickly. You see, this is what is the asset quality. 1990, when introduced the asset quality, this income recognition norm, 92, 93, many analysts written, these Indian public sector banks are written off. In fact, if you see, Mr. Kamath will say that when 2001, the public issue from PNB came, it was less than the book value. They were all started, entire NPA used to be deducted from the reserve of the bank, that this all become NPA, these banks have no future. But it is not the case. In fact, if you remember, your own share, 30 rupees share, has gone up to more than 1,000 rupees. So, what I'm saying, because of the introduction of the norm, what you have seen, the NP has come down. Now, this NP has come down because of variety of reasons. Because we introduced the concept of risk management, prudential norms, we improved the risk management system in the bank. We set up the risk management system in all the banks. There also increased write-off. Banks were doing a lot of profit because of the treasury gains. The interest rate was coming down. That's why also it has gone down. Credit growth was higher. So that's also partly high, that gross NPA and net NPA has this disadvantage. That if you increase the credit growth very faster, for some time it remains. Abundant liquidity condition was there, so you are increasing the advances. And fifth point, increased restructuring. You have started restructuring and thereby put the NPAs under the cover. Now, in recent years, NPA ratios has gone up, though on an average ratios are not higher. Let us not be too much worried. If I see the average basis, there's NPA ratios are not the problem. NPA is not a problem. I will come what is the problem little bit later. But 96 to 2003, wide variation between NPA ratio of PSBs and other bank groups, because that is the introduction of the prudential norm. And PSBs has lot of legacy issues, it was there. But if you see, after some time, they have all become equal. All the bank groups, whether it is a private sector bank, foreign bank, or public sector banks, they have become more or less equal in terms of the NPA ratios, gross NPA and net NPA. It was from 16%, it has come down to net NPA around 1% and gross NPA around 2%. I am not talking of the figure, that's the thing. But this four graph says how the four bank groups are varying. But after 2009, gap between PSBs, public sector banks, and especially the private sector and foreign banks, it has started rising in respect of the gross and net NPA. And this gives the comparison how in the recent period, banks which are contributing to the 75% of the NPA, they are contributing to the 86% of the NPA system. Again, with the caveat, this does not include restructured advances. If we include the restructured advances, then this situation deteriorates further. What I am all saying, NPA differs. NPA is not a problem only because of system. It also varies from bank group to bank group. So those bank groups where the NPA is higher, they need to address what is wrong with them. Now, but with one caveat, the gross and net NPA numbers have a limitation. And if I ask, the 2009 onwards NPAs are going up, all of you say because of the global meltdown. But because we only with the help of gross and net NPAs, we cannot find out what is the quality of credit management. Now, we have no data also. In fact, from 94, first time the gross NPA and net NPA were introduced only in the year 94, 95. And up to 2000, 2001, we have no other data other than the gross NPA, net NPA. But in 2001, Reserve Bank introduced flow chart of the NPA. That means how much is the addition in the NPA, how much is the reduction, how much is the upgradation, how much is the recovery. That gives a better picture. I'll come to this later on, how it gives a better picture. And when we analyze, we'll find something different. But banks on their own hardly analyze this information in a granular way. At the most, they have to submit a return to Reserve Bank, that's okay. So that's another problem where we are not able to tackle this. A more detailed understanding of the trends in asset quality of banks required collection and analysis of granular data about various aspects of NPA management, that is slippages, etc. And I will demonstrate how it will help. Such data has been collected only in recent years. Due to that segment-wise, activity-wise, it is only 2009 onwards. Before that, we have only banking system as a whole, this data. The current analysis is an attempt to examine the trends in asset quality based on this detailed information. Now, let us count the first thing, movement. 2001 to 2013, we have added more than 6 trillion rupees as NPA in the system. And reduction is 4.92 trillion. As a result, which was 60,000, it has become whatever the figure it has happened, 1,93,000 at the end of this. If I divide it to two periods, because as I say, 2000 we have introduced the prudential norms, all this time its results started getting, we had good situation because the growth was good, liquidity was there, your reduction was more than the slippages. The entire things changed from 2007 to 13. First point to be noted, quality of credit administration started deteriorating much before the financial crisis. And when I say that, it is not from 2009. It has started deteriorating from 2006-07. Banks have become complacent. That now the NPA has been brought under control. So that complacency led to deterioration in the credit quality from credit administration in 2006-07. And when the problem of global meltdown came, we are not able to control the NPA. Two things, again, on that, I'll quickly go through the figures. You can see two periods are different. It gives the different picture. But within that period, upgradation is not even 20%. And that is for all the period, whether 2001 to 2013 or 2001 to 2007, even your good times, your credit management was poor. Now, anybody ask me, why you say if the upgradation is less, credit management is poor? I think credit is the quality. Quality is that if somebody has a problem, I must be able to bring back into the health. So credit administration, credit management is more like a health administration. Now, suppose you have a hospital, and anybody who comes for the treatment, he goes to funeral ground. How you call the health administration? Now, in your system, the moment anybody develops little bit problem, he goes to permanently becomes NPA. You are not able to. So we have to look into that, why this is happening, what are the problems. I'll come to the issues. And one problem is we take too much time to decide. Not the intention is wrong, we take too much time to decide. And unless you can, it is just like in the hospital. If the patient has come and you keep him that you lie there for 3 days, anyhow after his death you cannot do anything. You will only do his funeral. The same thing is happening in the credit management. And figures saying that it was even in the good days we have not addressed this issue. And because this data, then it has to be more granular. Which are the area which is not, it is not happening. That's the thing. Second thing is that in the reduction of NPA, a major part of the reduction is by write-off. Now, I don't require any management to write off the advances and reduce the NPA. You all agree with me? We don't require any management that he will write off the NPA and reduce the NPA. For that, no management is necessary. But more than 50% was happening only through the write-off. You see, look, we are collectively responsible. We must say that unless we address these issues, we will be never. If we are saying that how we have to improve, what is to be done, we have to. That is why our governor is saying that people are looking 1 year term. During my tenure, what is happening? Okay, write off and reduce the NPA. No, those are the things, blames will come. I am not blaming you. We are collectively responsible for that, but we must address this issue if we have to move ahead. That only what I am saying, what is the data is saying. These are all figures for the last 13 years data which I have collected and which I am presenting to you. That's the thing. So second thing is that, now these slippages, you see ratio, it has started, the net slippage, it has started deteriorating from 6-7. Up to 6 it was deteriorating, 7, after that it becomes stopping. It has not. So your credit administration started deteriorating from that point of time. That's the thing. And now it started increasing. So I say slippage ratio, net slippage ratio, gross NPA ratio, whatever is the thing. If you see from 6 onwards only, it has started a little bit increasing. And net slippage ratio, gross slippage, net slippage ratio is very clear. From March 6, it has started increasing. It is again without taking into account restructuring. Now, this is slippage to recovery ratio. What we are saying, how much has become NPA and how much is the recovery and upgradation. If I calculate this ratio, it was progressively come down from 190 to 125. After that, it started increasing. So, all of our saying that our NPA problem started from 2009, it is incorrect. Our problem of NPA sheets were shown much earlier, and it has started giving the result, but we have not applied. It is from 2000. That's what I'm saying that, look, we have to do little bit more introspection what has gone wrong. Yes, global meltdown has further affected us, but credit administration was deteriorating. We have not the because there was no further tightening of the norms. Now, average slippage and upgradation ratio, again, if you see, 2001 to 13, there is clear-cut difference between the banks, you see, which are. And if you see banks which are able to identify the NPA quicker and faster, they are able to manage the NPA better. Hiding the NPA is not going to help you. That this is what I'm saying. Look, if you say the slippage, this ratio, the foreign banks or private sector, they are identifying the NPA, they don't restructure, and they are able to tackle the NPA. So there is no use of delaying the thing. The issue is that if an account is creating the problem, identify, recognize, and do that, that is a much better course of action. Now, this I have already said, that your recovery is only 48%, and this percentage has come down to 29%. And again, if we say reduction as percentage of slippages, upgradation is only less than 20%. It is constant, and this has come down. This has become all-time low. You see, it is now 29. The average may be 70% reduction as percentage of slippages. What we are saying, clear-cut, there is a deterioration in the credit administration and recovery administration. Reason will come little bit later. In the aftermath of the crisis, slippage ratios rose, especially for foreign banks. And you see, look, it is not that 2008-9, even foreign banks have a very high NPA, very high slippage ratio. But what they did, they recognized the NPA, write off the NPA, and took the corrective measure. Whereas we tried to do, from retrospective date, we restructure a substandard account as standard. You see, we must remember what we have done. That an account on September, if it has become NPA, in the March, if it is restructured, it will be considered as standard. And that's what created the problem. And everybody started doing that. So one of the problems with the PSB is this, that we have not recognized the problem. We tried to put that thing. Regulatory guidelines have also favored you. As a result, we are not able to control the situation. Recovery performance also varies. I don't want to figure. These figures are available. I have told in so many forums, I did not say this is only hard figure, that it varies. It is not the same. And you know where it is good, where it is bad. I need not tell you. These are hard facts. Now, but the problem is that if we add the restructure, then the position deteriorates further for the public sector banks. You see, even foreign banks have slippage plus fresh restructure ratio 6.8, but they have been able to bring it down to 1.8. But whereas we are not able to bring down to 5.22, so you have to look into that, why this has happened and why this is not happening. The issue is not there. Others have been able to bring down. So these are the conclusion. Upgradation as a percentage of slippage is very low. That means we are not able to keep the accounts healthy. We are going for terminal measure or put under carpet. That's number one. Recoveries are very less. And even during 2001-07, recoveries and upgradation were not as good things, have consistently deteriorated thereafter. Gross NPA itself is not a problem, but in conjunction with restructure advances, they have emerged. Even today, our gross NPAs are not that bad. But what is the problem? Nobody believes our restructure advances. And they say entire restructure advance will become NPA. Those are the issues. The restructure has become problem, and everybody is giving the statement. When I read that no NPA problem is there, all these advances will become NPA. You yourself are saying. I don't know whether it is right or wrong, but when I see the press statement, that's what I see. But then that is a problem. Now, you see, this restructure advance was a problem not from today. You see, look, if you see March 03, your gross NPS was much higher, restructure was much lower. And it was much lower up to March 08. There was a jump, and that is what is the regulatory forbearance. And after that, always our restructured portfolio is more than the NPA portfolio. Whereas, if you see the earlier period, it was less than. And if you see bank group-wise analysis, many banks have no restructured portfolio at all, very, very limited restructured portfolio. So that's why governor is saying that we are evergreening. We are not saying that thing. Ratio, so you see, restructuring is nothing. If you believe that company is going to survive, please do that. But not to give him a lease of life and putting the things under carpet. Restructuring of unviable units should be avoided. Deserving and viable units, especially for small borrowers. In fact, our grievance is that those who are viable, where the restructuring help, they are not getting restructured. And this is happening at least for the small borrower segment. Restructuring is very, very poor. Where they are not viable, they are not going to add value, you are restructuring them, and you are again pleading for them. Now that is one lacuna, again we have to address. How do we correct them? Restructuring includes use as a tool of NPA management by tool. It cannot be NPA management. Restructure is identifying the stress and then see that. And that's what I'm saying, standard advances restructure, what is happening, how the ratio, it has gone up from 5.1 to 9.2, whereas NPA ratio is not that bad. Now, if we combine these things, bank group wise, again, you are all well known. What I'm saying, suffice to say that those groups who don't restructure their NPA management is much better. Their NPA management is much better, their errors NPA is less. Now, you have to decide what to do. Whether I recognize the NPA and then do that, or I restructure and put that thing, let the next chairman come, he should tackle the issue. Now, there is one more problem. You see, we have one problem of restructuring. Another problem is write-off. And in that write-off, what is my problem is technical write-off. Now, what is this word? I don't understand. And that has again distorted my credit management and credit administration. Why I'm saying, in the last 13 years, what we see, banking system as a whole has written off. In fact, nobody knows this figure. And you need not say, but nowadays we are disclosing this figure in the balance sheet. It is more than 1 lakh crore advances have been written off. We only talk of debt waiver of the agriculture borrowers. We don't say this debt waiver, and it's 95% are all big loans, and it has been written off. But whenever I say, they say it is technically written off. Now that created the maximum distortion in the credit administration. Because what is this technical write-off? What is the partial write-off? Why this is to happen? We know this accounting, this thing. And that makes the overall understand. Because whenever I ask, you see, why I am saying this is very important, this write-off is not uniform across all activities, across all segments. Now, when you compare the NPA, what you say? You say small loans NPAs are high. But you hide the fact very conveniently that small loans NPA never write off. Now, I give an example. Suppose there are two banks. One bank is having 10 crore NPA, he writes off the NPA. His NPA is 0. It's a very good bank. Another bank whose NPA is 10 crore and he does not write off. You say he's having 1% of NPA, this bank management is not good. Now, all this is going here because of the write-off, unless the write-off is by a principle, and you are saying that, and this distortion has been created out of technical write-off, because if we have worked in the bank, you know, normal write-off is very, very difficult in the bank, and only in a very, very, you see, critical situation, we actually write off, nothing can be done. As a result, many of the things, what has happened, first thing, people say, sir, right to recovery exists, there is no problem. It is written off, but it has created a moral hazard. If you are written off 100% any asset, and it is backed up by 80% asset, even if you get security of 50%, you will be tempted to compromise that. And look, our system is a democratic system. We function within the pressure groups. And there will be tremendous pressure on various people that you are getting 50%, you are making the profit. What is the problem? We are getting this money today, this is the thing. Now that creates to more sacrifice. Now this system we have to stop. If we are not able to do that, first thing is that we will be not recovering the amount which we are entitled to do that. And the second thing is that it does not give across activities, across segment, what is the quality of credit, what is the credit risk, quantum of credit risk. And again, this is where we have created a new ratio, what we call impaired asset ratio. That what is gross NPA, plus what is the restructured, and plus how much have been written off. All if we combine and total advances plus written off amount, This comes for the banking system as a whole. For PSB, it has gone to 12%. What do we call? This is the real impaired asset. It may not be NPA, but that is stress asset ratio, and it has become 6 to 12. And if you see, it is the bank group buys. It is only a old generation banking phenomena. It is not a new generation banking phenomena. And I think we should become modern. We should move ahead. And both the old private sector bank and public sector bank, the middle level we need to squeeze and go into that. This is the thing. And the bottom level, that is what I'm saying, that we will come to those issues. These are only data. Now, as a result, if I don't compare NPA, but if we compare the impaired asset, agriculture finds to be much better, retail finds to be much better, culprit appears to be industry. Now, entire thing, for the last 30 years, we have shown that public sector banks' NPA is high only because of priority sector, priority sector. This myth has disappeared in a single moment. If you see, when I say restructure, because you don't restructure the poor SME borrower's account, so it will become NPA. You don't write off his account, so it will remain in your book. So this is what is the data which is gives. Then what is happening? All your business decision is wrong. Starting from the chairman to branch manager, everybody feels that agriculture advance is unprofitable, only big advance is profitable, and everybody is running for the big advance, NPA advance. And the fellow who is doing the good advance, NPA, that nobody wants to give the loan. So entire quality of credit administration is coming down because you have no data. And this is what I am giving the data for the last 5 years, all what the banks have submitted, and one myth has proved, the smaller borrowers, its stress is much less to the bank books. It is our treatment of them, our administration with them is making the more problem. And that's why, as a result, you are losing the business opportunity. We have made the interest rate free. So you are giving NPA borrowers, you are running after them by charging 11%, and the people who are ready to give 13%, your branch manager don't give them the loan. And as a result, your quality of credit portfolio is deteriorating. You will be never able to tackle this credit administration. You see, very powerful statement I am saying. And for public sector bank, if this statement is available to the member of parliament, believe me, you have a problem. So before it goes, now it cannot be hidden because it is coming. We must improve ourselves and say that what is happening. That is when we are not talking of financial inclusion, but that if the thinking is that these accounts will become NPA, and it is from everywhere, and that is because we have created based on a thing, we need to more make the people aware that why the NPAs are more in the small loan. One reason is that I cannot put that much efforts for monitoring, follow-up, recovery for the small loan because of the number of accounts which can be done for the bigger account. But more than that, our approach to treat them is different. So we must look into that. For smaller, how should we sanction the loan? We are conducting a seminar for the SME sector on the scoring model. And that is how you can tackle that. That's a defined issue. I hope some of you send that. You see, look, we are not silent. We are pointing out. We are trying to rectify. We are trying to tell you what needs to be done. But what I am telling, banks will not be banks of the future if their branch managers do not sanction the loan at the branch level. Because your NPS last there and you can charge anything. So if you want to become banks of the future, the sanction not to be done at the MC level, CMD level, sanction of the loan has to be done at the branch level. And that is one of the greatest lacuna of the public sector bank. If you don't believe me, you can ask anybody how many loans is sanctioned by each one of your branch manager every day. There is nothing. If that is not there, then you say that how this is to be done, can we do the processing center, scoring method? Those are the things we have to look into that. So this point has gone down. Increase in NPA by adding restructuring and write-off. This is what is happening, and which are the segment I am showing you. That where these are all big people, and you have given enough loan to them during the last 5 years. The problem is that how will you tackle the NPA? When I say your NPA should reduce, you must give less loan to those activities where your NPAs are more. Whereas you are doing the opposite. We are giving loans to those activities where NPA is higher. So you will be never able to control the NPA. So restructuring provided primarily to large corporates, medium and large accounts make up over 90% of the restructured accounts. Larger ticket accounts hold major share in the CDR, and this is what is the data I am making available based on whatever the data supplied to me by each bank. Now, whether you analyze this data activity-wise, branch-wise, segment-wise, geographical region-wise, I don't know, but this is not being done, and unless we do that, we will be not able to improve the credit management. The restructuring write-off is, including sanction, is more favor of bigger accounts. So this I don't want to again do that. This point I have already made. I don't want to repeat. Asset quality was for directed lending a myth. Now let me come that whatever I have analyzed, what are the conclusions? First thing, we don't have information. So many of our decision is based on wrong information. So we have to generate the information system, more granular information on recovery, write-off, restructuring, activity-wise. These we have started collecting only 2009. Even regulator has never collected. In fact, I don't get any data other than gross and net NPA beyond 2001. I've asked Reserve Bank, give me any data, no data is available. So we need to build up this data and find out what should we do. We'll show you that we can do many things. So as a result, because you don't have data, you don't know where the things are going wrong. And many of these things we are doing based on the impression. GDP slowdown, it has led to increased NPS. Everybody is saying, but our GDP has started slowing down only last 2 years, but NPS started growing for the last 5 years. And in fact, they started increasing from 2006. Now, is it that in 2006, everybody was knowing that my GDP will become 5% in 2013? At least figures say different, that NPS started increasing when the GDP was strong, then also NPS increased. Yes, it has only aggravated the problem. Now if the GDP do not grow, you have more problem. There is absolutely no doubt in that. But then that is an issue we cannot tackle. But what we can do, we can improve our administration. Higher NPA only a result of GDP slowdown, that I have already said. The slippage does not say. Anybody says, everybody says, this NPS will be there. And all of you say, in any meeting, supervisory meeting, sir, because economic growth has come down and growth has slowed down, customers are having very bad time, and that's why NPL is high. But it is not across all the banks. If the economic slowdown has happened, it cannot happen only one category of banks. It has to happen for all the banks across the system. If you compare the NPS across the system, restructuring across the system, impair stress it gives a different picture. Second thing, if you say because of that there has to be regulatory forbearance and concession for the restructuring, then smaller people require more. But your restructuring is very much against the smaller people. If there is an economic downturn, it is smaller people will be affected more, but they don't get any benefit. So it has nothing to do, yes, generally it deteriorates, but our decline in the asset quality, our impaired asset is partly within us, and we have to look into that. PSBs suffer from structural deficiencies related to management and governance arrangement. In terms of the structure process, I don't want to say that. There are many issues there, but we need to address that. First thing is the accountability is not there in the system. Deficiencies in credit management crept in during the pre-crisis good years. This is number one. In general, banks with high credit growth in 2004-08 ended up with higher NPA growth in 2008-13. If you increase the credit faster, NPA, subsequent years, NPA goes up. The appraisal process failed to differentiate between promoters' debt and equity. This is very important. I'll come to this issue again and again. Promoters' equity contribution declined, leverages are higher. Credit monitoring was neglected, recovery efforts slowed, legal infrastructure for recovery, this is also there, and restructuring became rampant. And this has all led to this situation. You see, what all I am trying to say, that when you sanction the loan, you don't also look into from where the equity is coming, whether he is having equity or not. Second thing, You don't know how much is it growing. Now, if somebody wants to grow by 50%, he says, I require my limit has to be 2 times. Why should you give him? And is the debt-equity ratio for a borrower who wants a 20% increase in the limit and a borrower who wants 80% increase in the limit should be identical, it should be different. Now, this is the leveraging, what is there, but we said that same thing. No, if he wants to grow by 80%, let him bring for 80% equity and 20% debt, because he is taking more risk. How come in the system if everybody is growing by 20%? Now, this we have not built up in our credit administration. The leveraging, we are not seeing that. Appraisal is a big issue. Now, because of appraisal, the fraud. You see, look, these are all interrelated. Now, when I say your appraisal is bad, banks are very unhappy. No, our appraisal is of world standard. You have 16,690 crores. Your own appraisal amount, more than 1 crore, you have declared as fraud. That means you have an appraisal system where the fraudulent customer comes and gets a sanction from you. Now, I don't know. Then you say that after 25 years, and you see, if I analyze the fraud, if this year he will be declared as fraud, before 2 years, you have increased his credit limit at least by 30%. Now, when you are giving him the credit limit 30% all of a sudden, and people tell me, sir, for 20 years we are banking with me, there was no problem. But you see his last 2 years credit growth, and you will see what is happening with him. Find out last 2 years for this credit growth from where he has brought the equity, you will get the answer. Now, I cannot say before 20 years he was not fraud. But if last year when he is increasing the credit growth like anything, you are not looking into that, we must look into that, what is happening. Now, this lacuna of the equity-related leverage of the customer, today there are borrowers who are coming for restructuring to you who are have a debt-equity ratio of 17:1, 8:1, 5:1, they are coming into that 6:1. And these borrowers cannot survive, and this has happened. Now, why this has happened, I will come a little bit later, but it has to do with the credit appraisal. It is both at the time of sanctioning, at the time of restructuring. And the sample of 10 large corporate groups, credit more than double between 2007 and 13. Growth has come down. How his credit is going up? And for what purpose he is taking the credit, I don't know. Credit growth concentration segments with higher level, wherever NPAs are more, credit growth has been higher. Whereas if you want to have a healthier credit portfolio, the segments where the NPA growth is less, your credit growth should be higher in those areas. Now, your credit growth, you are directing the credits in the area where the NPA growth is more. So NPA borrowers are managed to get the money from the banks, and good borrowers are not able to get the money from the banks. If that is the situation, unless you address this issue, we will be never able to become the bank of the future. 2-3 things more in that. You see, whenever any customer comes, bank, if a customer comes, sir, the rupee has become now, dollar has become 40 to 60. Then what? When you have taken a ECB loan, if you have not hedged, you must have a contingency. If the dollar becomes 2,000, what I will do? Now, many of you say that we do the assessment, but you take a credit risk on the borrower. Now, will you ever say, if I do a simulation, if the dollar becomes 200, what will be the credit limit for this borrower, what you have sanctioned? And thus, these companies' balance sheet will be able to support that much credit limit. Again, wrong appraisal. You have never stressed that after a particular stage, when I will say it has to be compulsorily converted into that, this has never happened. So again, wrong appraisal. You have taken a credit exposure which your normal appraisal method do not sustain, because you have taken that dollar will remain 40, 45, 50. But what happens if the dollar becomes 200? And who has said? Bernanke has not given a guarantee that $1 will be not equal to 200 rupees. Now, that contingency is not there. You see, look, I all agree that it cannot happen. But as a banker, we must have a contingency. If that happens, how am I going to tackle the issue? How much haircut I will take? That is today not. That is today absent. Same thing. Sir, interest rates has gone up. That's okay. I also know interest rates have gone up. But when you've taken a floating rate interest rate, have you stressed it? That what happens if the interest rate goes up by 300 basis points? Now, globally, you see, I tell you, in the banking, and this is a lesson for you, globally, all central bankers, regulators are doing the stress test. Earlier, the general trend was with 200 basis points. Now it is 400 basis points. Now, when you are appraising the project, you must stress it by 400 to 500 basis points, and then say, I have no problem. You see, if you are happy with the person, you say that if 500 basis points will increase, I will take 20% haircut. I have no problem. 20% of my principal will go. But beside that, keep that contingency ready, and then only give the loan. Otherwise, you are in the lurch. Now, people they say, sir, I have got a coal license. Now, coal is not there. Okay, no problem. You give the loan, the letter, because some bank chairman said he has given a letter, I have got an admission. But if the coal mine does not produce the coal, and if you don't get the coal, what will happen? That contingency is not built up in the project appraisal. If somebody says, I am setting up a gas-based power plant, if the gas does not come, what will we do? At least some contingency has to be worked out. I have no problem. You say that 50% of the advance I will write off. Now, these are the basic lacuna, because you are saying it is uncertain times. And in uncertain times, my appraisal standard, if does not improve, you will be not able to check that. All what I am saying, look, it is the post-mortem we are doing. We must improve and we must build up. Now, these are the learning. There is no use of doing that this has happened. But what I'm saying, this is all analysis. That project risks have not been taken to restructure next into large corporate that face problems of over-leverage and inadequate profitability. Even in restructuring, you don't judge it. Ability of corporates to service debt was failing. Exposure of companies to interest risk was rising. And in that situation, you are giving more and more loan to them. No other way you will be able to stop NPA. Having said that, let me say that these NPAs are not that high. We have faced much higher NPA. In fact, it was 21%. We have brought it down. We need to address. So what all I am trying to say that, look, NPA is not a problem. Process system structure is a problem. Even this NPA will be able to tackle, will be not out of this thing. And that's why my purpose of this presentation is not that you cannot become bank of the future. If you have become the bank of the future, then you have to improve the system, process, and this thing. That's what I'm trying to point at. We have tackled even much greater crisis in that. But what is the problem is the system, process, structure has become a problem. And we need to address that. We have done a test also, baseline and all these things. Even if we do, banks will survive. You see, I am not saying that whether they will become banks of future or not, but they will remain in the future. That much only I say as of today. But if we don't improve the system, process, and then structure, we have a big problem. And this is the thing. That's the only purpose for which I have made this presentation. You see, the one is that you have to make more and more provisioning. You have to make the balance sheet stronger. Forget about the profit. So long as this is the thing, you are not making loss. Create as much as provision is possible. And this is what I'm saying, India's provisioning as compared to the global problem. And this provisioning does not take into account our restructure advances. If I take the restructure advances, the provisioning ratio come down from 45% to less than 30%. So that means we have not strengthened our balance sheet. That's the key. Then how will you become a bank of the future? So this is what, if I add the restructured asset and all the restructuring provision, etc., this is what is happening. There are banks with 74%, there are banks with 53%, there are banks with 27%. Again, I don't want to go to individual bank. What all saying that we have to look into that, otherwise you will have a problem. You have to strengthen your balance sheet by making more adequate provisioning. Now let me come, what are the moving ahead part, last part. Short run, addressing the existing stock of impaired assets. You see, first we have to tackle what the NPA. Classify into two parts. Those who can survive, those who cannot survive. Those who can survive, time-bound revival and recovery. I will come to this issue. Long run, what we have to do along with that, robust risk management, improve information system, facilitating granular analysis of... You see, I have only said bank group-wise and some broad activity-wise. But if you have a data, you can go to branch-wise, you can go to activity-wise, you can go to activity in a price segment, and you can find out much more detail, and then this can decide what type of action is to be taken. Improve credit management, credit appraisal. And credit appraisal, I will come that what one basic thing, what I require is that, and that is the fundamental of banking, that there must be equity. I'll come, and facilitative regulatory and legal infrastructure, no problem. Now let me come for NP and restructure, because we cannot forget, we have to get out of this problem. It cannot be, and that must be equity, not the borrowed equity, not the structured product. Because our bankers' friends, all of you are giving the structured product, but which is nothing but a debt. If need be, bring new promoters. And this burden, whatever sacrifice, you see that everybody is equally sharing. These are the principles on which it has to be worked. Accounts found unviable, put under time-bound asset recovery, banks take over. And you see, look, don't delay it. If we are getting 40% haircut, take a haircut, take the money, that is much better. More you delay, even this much money will disappear. Now, this existing one time you have to do, if you want some type of comfort, ask the government Reserve Bank, create a high-power committee to clear this thing, the bigger amount. But unless you do that, you have to get out of this problem. If we keep in our books these things, wherever the survival is possible with the real analysis, try to do that, but in that the basic principles I have given. Other thing, you must go for recovery and whatever money you get and look into that, including what is the security value. And go into that, compromise, ask the customer to bring another borrower, whatever it may be. But this has to be done first. We will be not able to get out of that. That is short-term measure. Enhance credit appraisal, group leverage. We don't know how much is the group and what is the group equity, how much is the group leverage. We have to improve our, and you see, look, our entire problem is because of equity. Now, what happens, you see? If he is not having any equity, he has no stake in the project. So you have not become Bank of India, you have become Venture Capital Bank of India. And majority of our banks are today doing venture capital financing for many corporates. I have no problem, then you must hold the equity, bring the promoter, you must decide. But it is the borrower is deciding and he has no stake. Now, he is bringing majority of his equities in the terms of debt. He has mortgaged his house, and I have money. Or he has borrowed from some other bank, and this is my equity. Now, if he has brought the money by borrowing, mortgaging his house, his first objective is to divert the money and pay back his debt. And then after 5 years, you say he's a fraud. The entire, you see, look, this is what I'm saying. That is why you are now declaring him as a fraud. And the moment he's in difficulty, he tries to do it more. The moment he's in difficulty, he tries to do it more. And then after 10 years, you say it has become a fraud. It is not a fraud, it is a business failure. He was not fraud, he was a good person, but circumstances have compelled him. And only thing, this type of behavior has been facilitated by the bank at the time of wrong appraisal while giving the loan. And you can check it anywhere, unless you improve that, it is nothing. And that same thing is at the restructuring. What is the source of equity? From where the money is coming? Don't believe what the borrower is saying. Say that, show me from where the money. If he says it is somebody investing from abroad, believe me, I have seen he has a fixed deposit in some other bank. Against that, he is taking the loan and giving him the equity. Very, very clear, say that, bring that fixed deposit here. I have no problem bring that money. Our current account deficit will come down, so Reserve Bank will not blame that much. Ask him to do that. I say, don't do that. But this is one area, group, all complicated structure. They are all listed at the bottom. On the top, nobody is listed. So parent is giving me the loan. And each group is having 304, 305 companies. From where the equity, cross-holding, you must develop the expertise. If you don't have, borrow that expertise. Appoint somebody in that policy. But unless you are satisfied from where capital is coming, if you don't do, then this wrong appraisal is leading to diversion, leading to over-leverage, leading to fraud, leading to NPA. They are all interrelated. And if today you are in the mess, it starts from the basically, we have not appraised the fundamental principle of from where he is bringing the equity. And one of the reasons may be, you don't find anything wrong if somebody borrow the money and bring this as equity. Because your owner is also giving you equity by borrowing. We have created a system like that. The problem is that because you don't follow corporate responsibility, it is a good thing. By borrowing, I must bring the... Nowhere in the world, if government is not having money, they don't invest in the equity. But this happens. Now, okay, whatever, if you are getting the equity by borrowing, I have no problem. But you don't allow your borrowers to follow the same principle. That's the only point I am asking that. Unfortunately, you have followed this principle. You see, look, many times when the system distorts, we don't understand what should happen and what is happening and how this has happened. And this all happened because of today borrower has no stake. The moment he is not having equity, you are in the obligation to restructure the loan because you want to save NPA. He is least border. He said, nothing I can do. Government is not doing anything. I am not making money. My fellow exporter, he is not taking the order. He is giving all these things. That is not your business of bothering this thing. Strengthen the credit monitoring, MIS, early warning system. I don't say, see, if you don't strengthen the MIS, this is abysmally lack. Even this much data, I have to struggle for last 1 year. To get from the banks this much data, this is the thing. But I must thank all the banks, your departments. They have really helped us, worked with us. My people, Dimple is there, Osmos people is there. These are things they have worked with us. As a result, today I can very confidently say, look, what are the problems? And if we don't do that, that is why I am able to say that, look, unless you have to improve, then you have to address these issues. One more thing, there is no accountability for the failure of big loans. Because I see majority of the big loans are sanctioned by the board, what you call MC, or the CMDD. But when I see the fraud, who are accountable, it is DGM and bureau level people. We cannot run a system like that. You must work with, dialogue with the government. Person who sanctioned the loan, he must be made accountable for his monitoring, recovery, and follow-up. Now, many people tell me, board, we can't do that. If you can't do that, don't sanction the loan. Let us give the privilege of sanctioning loan to branch manager. If he is responsible for recovering and monitoring and follow-up. Don't sanction any loan. Create a policy and say that. Unless we bring this accountability, the system will never improve. So accountability to encompass all aspects of credit management. So think very clearly that how it is to be done. Accountability for delayed decision-making, non-action. In fact, for non-action, there is no accountability in our system. Unless we address these issues, today time is the clear thing. The sanctioning the loan, time is important. Helping him, the time is important. Even if to decide whether I'll pull back myself from the project again, time is important. If the timely decision is not taken, we'll be not able to get out of this mess, which has been created because of some of the wrong things which we have done, and we have to rectify. So I don't want to go into what are the information system. This all I have listed. It will be available today, tomorrow in the bank's website. What I'm saying, this is lacking. We have to create much more granular, reliable NPA and use that NPA for the decision-making process for improving. At least information about the equity of the borrower. That is most important thing. Now, need to review the existing. Two things we must do immediately. We must move away restructuring. There should not be any category called restructuring. The moment it is restructured, it should be declared as NPA. And there should not be any technical write-up. That is the first regulatory things we want. Be prepared for that. If you don't do that, you will be not able to get out of that. This is the thing. But then today, I cannot classify all the restructured accounts as NPA. Then you decide which are the NPA, what type of forbearance one time will be required, at least where there is no sacrifice of the customer, refinancing, or he's bringing the money somewhere else, or if he's servicing the interest so long as service, those type of forbearance you take. But beyond that, if an account is NPA, better to classify it as an NPA. And if you want to restructure, do the restructure. If you don't want to do, then go for recovery. These two things has done the maximum damage. The practical, that is what a technical write-off. And I'm ready to discuss what happens if you don't do the technical write-off. Today, provisioning, there is sufficient provisioning coverage available. Even if not there, it is much better to pay the tax rather than distorting the system. Increase provisioning requirements in line with international norms. This is what I said. I have seen the country-wise. Of course, this is a regulatory issue. Then uniform approach to regulation. Don't come by activity by this project-wise. Our problem is our regulation has to be either principle-based or rule-based. It cannot be discretion-based. But many of our restructuring decision policies are discretion-based. Corporate debt, you see, CDR is not functioning. You have to, they don't any role in doing the due diligence, the CDR cell. And remove existing bias towards large ticket accounts, ensures viability and promotes the stake upfront, and if need be, create an independent oversight for the large CDR account. Debt recovery tribunals, you see, they are saying that these people are not doing. How many of you are having meeting with the debt recovery tribunal chairmen? Why don't you have a meeting whenever you go to visit and ask your people to follow it up? You will get some result. You see, legal system will improve that thing. What I am saying to that, on everybody there has to be some pressure. Rather than that you send your people, or if you are going to some places, you are going to Vizag, why don't you meet the debt recovery, this thing, see that, say that, right there. That itself will the result. That I can tell you my own experience as a bank chairman. And of course, you can pursue of setting out of more DRTs and DRTs, how they can happen. Some of these things are already happening. And sharing of the information. We must make all credit information available to everybody. So this is all my presentation. Let me very summary say that. The analysis is saying what? Analysis is saying few things are coming. First thing is that regulatory forbearance does not improve the credit management. This weakens the credit management. Our NPS, if they have increased because we have given more regulatory forbearance, and you demanded more regulatory forbearance. That's the thing. If you demand, I have no problem, but you must know that this demand will be not met. Just like the unions demand. They are asking 30% wage rise. They also know they will not get, you also not going there. Improving the MIS, you must have a much more granular and effective MIS. Third issue. Leverage by your borrower, less equity, high credit growth. High credit growth, frauds, and NPS, they are highly correlated. Corporate borrowers leverage, high credit growth, NPS, and frauds, they are highly correlated. And they are the first derivative of the inadequate credit appraisal in the bank. And you have to strengthen the credit appraisal system in the bank, bring the new expertise. How are you going to do that? That's the second issue. Third issue is that be a little bit more sympathetic to smaller people in that, but bring more stringent for the bigger people. And the people who don't bring any equity, are not ready to share any pain, absolutely they don't require any sympathy. But today, you will be in a crisis situation because he has no stake, so you have to be a little bit more practical and see that how it is going to happen, but it is more future. And fifth and more important, time is the essence, and we have to take timely action everywhere. If we are not able to take the timely action, we have a problem, and that is based on information. These are the few of these. You see, idea was not it is to criticize. Idea is that's what I have taken a much more longer, more than 20 years, in which period for a longer part I was myself associated with the banking system. But we must understand where the things have gone wrong. And we must try to rectify the thing so that the purpose of this conference, we are saying that we want to be bank of the future, that purpose is achieved. I am again saying NPA is not a problem. But system, process, structure, process is a problem, and we need to address this thing as quickly as possible. This is a presentation we have made. It did not be complete. My colleagues have worked hard for the last 2 days to complete that thing. Still it requires some brushing up. But I'll be discussing these findings more and more with you, and especially if you don't agree with that. Beyond that, if you have any question, who don't agree, I'm ready to discuss with them. Thank you very much. Don't worry that we'll be not able to tackle the situation. But we must resolve that we'll tackle the situation. Thank you very much.
We'll now begin the question and answer session. The floor is open for the Q&A. Thank you.
There's no question. That's my problem now. You see, if you can work. So those who have agree with me, they need not ask any question. If you all agree with me, then act on it. In that, if you have any problem, that this is what is our problem, you can raise. But I am not saying that we are ready, because it is very difficult. That you see, because wherever I speak, it is with so much analysis, people will find it very difficult. And they know if they are not ready, asking the wrong question is also dangerous. So I have no problem with that. But yeah. But don't give the story, give only question. Yeah.
Sir, large numbers of NPAs originate from government sector.
From?
Government sector. Like Air India, Discom, you know, EPC companies where government is not paying. What you suggest about that?
No, I said appraisal. You see, nowhere the Reserve Bank guidelines or bank's internal guidelines say that government companies' appraisal has to be different. I have not seen. If there is any such guideline, you say that this is the thing. Look, we say performance is ownership neutral. Who is the owner? I am not concerned with that. And you see, the government across the globe have failed to pay back the money. Their track record is not that good. You see, look, before the financial crisis, everybody was looking for one thing, and you all say that. You see, sir, risk-free return. If I invest in the government bond, it is risk-free return. After the financial crisis, it is all become return-free risk. So if you are giving the government companies money, your appraisal has to be much more stringent. That's what I'm saying. That more powerful is the borrower, your appraisal should be more stringent. That is the basic message I have given. You don't take the other thing. Be a little bit considerate for the smaller people, but you are harassing them.
Sir, my name is Sanjeev Gupta. I work in the infrastructure financing space, especially in the infrastructure projects. Sir, once, let's say one of the project has been set up and there is a cash surplus available almost as a dividend account, it's actually skimmed and used for the financing as equity into the other project. Now with this message, sir, we would not be able to structure any more projects, equity coming from one or two or more projects being available to bring in the equity.
I got your point. Please first pay back the loan, then go for your cash flow, you fund the other project. The matter is over. First pay back the loan, then go for the cash flow and do that.
Sir, but whatever is surplus, sir, that can be used.
No, surplus, you pay back the loan first. You see, this is what I am not able to understand. All we want to do the business with other people's money. That has killed the system. Because when If the return is 20%, interest rate is 10%, you are very happy. I am putting, and in the result there is no equity. And the moment the project fails, you simply go away, say that now we take away the project. The road is there. For infrastructure project, we should be very clear, the equity must be there of the promoter. And the public-private partnership has done the maximum danger. The public-private part was to bring the equity in the infrastructure project. They have only brought the debt. And that's why we are in this problem. So forget this. This is the thing. Whatever infrastructure has created, let them first get the benefit of that. You are talking of creating new infrastructure. You see, having said that, if the bankers are happy that after getting back their money, there is still further cash flow which will be able to fund the... I know equity has to become at one time. You are saying my cash flow will fund the equity. That is where I am not able to understand. Future project, that project also will be jeopardized. If the cash flow, this project stops generating the cash flow. So you will not only kill one project, you want to kill 5 projects together.
Sir, you are so sympathetic about the small borrowers, small farmers. Here I am. You are so sympathetic for the small farmers or small borrowers.
Sir, I am also a small person.
Yeah. But then why those stringent security norms from RBI for these all agricultural loans? That is 1 lakh is a very meager amount. And there is no coverage for any such type of advances where we get the comfort to financing as many as farmers or small borrowers. That should be, Reserve Bank should come forward and get.
If the banks give the money without security up to 1 lakh, it is more than happy. No farmer is approached to me that they are finding is difficult. Those who are availing more than 1 lakh loan, I don't know what is the problem that they cannot give the security. If you can bring me any farmer who is telling me that I have a problem of giving the security, we are ready to examine.
Sir, there are security...
Are you a farmer?
Yeah, I am a farmer, sir.
Have you ever cultivated?
Yeah, no, I am not cultivating.
You bring that. What is your problem? What is that land you cannot give as a security? You tell me. If you are asking for more than 1 lakh loan. You see, look, security means bank is not taking over your land. Only if you are not able to pay back the loan, then only. If you are 100% sure of paying back the loan, what is the problem giving a paper? You are only giving that security, a paper is extended and it is put in the bank's custody. What is the problem if you are so sure of your project?
So one question regarding the sale of asset. I think you've laid out very well the underpinnings of the problem, but given the status of the NPAs, what is your perspective? How important are asset sales of sale of bad debt? And what role should that play in the solution of the problem?
No, I have no problem. You see, look, only thing is that ARCs have failed in this country. And their pricing is most non-transparent. Bring more transparency in the pricing and don't give unnecessary. I don't know what we can help. I say they need to be resolved. If the banks themselves are not able to resolve, we are not against that it should be resolved through the ARC. But whatever little bit experience I am having, ARC pricing, ARC functioning is not that transparent. We need to bring more transparency in your system. Beyond that, if regulatory anything is coming in the way, we are ready to look into that. We have no problem. We are nowhere saying that bank cannot resolve their bad asset through ARCs. But it has not taken off.
Thank you.
So this is Mishra from Bank of India. It's a small question. You said that restructured advances, all of them, should be categorized as NPAs. But there are many genuine cases where, because of time overrun, we give them extended time.
You see, look, I have said where no sacrifice of the banks is involved, you may give. The problem is that what I mean by if time overrun, okay, if he's servicing the interest, don't classify and you extend the term loan. I have said that. But you cannot say every asset which is restructured will be classified. Second thing, even if it is NPA, then what is the problem? NPA is not a loss. You are making a provision. You are only strengthening your balance sheet. And as and when that account becomes regular, your provision will reverse. And I am not able to understand what is there, what is the objection. Why is such antipathy that if an account becomes NPA, I cannot restructure it? Beyond that, I am all saying, if you can follow the principle of money lending, so long as borrower is paying the interest, money lender is never worried. You can follow that. But there is no sacrifice, no FITL, no again FITL. Neither the past interest is not paying, nor future interest will pay. Those type of restructuring, please avoid.
Can we please permit floating provision, which can later be used in the event there is any default?
Look, the issue is that I am from Reserve Bank, but I am a supervisory authority. I am not a regulatory authority. But I have indicated that is one wrong thing which has happened. That means I am supporting, you have to create the demand for creating the floating provision. I am in favor of that. Okay, na? Yeah. There is nothing, but this is, globally this has happened, and accounting profession has put the banking regulators and the bankers into this problem, because they say smoothing of your profit, etc. But then that has now, after the crisis gone, I am personally in favor of creating the floating provision and using it as and when you require. And this is one thing we are pursuing even at the global level through the FSB. And I think Reserve Bank is willing to consider that, this thing.
And permit its usage when the chips are down.
Yeah, absolutely. Otherwise, nobody will create. Nobody will create. That's the problem. There is, even today, there is no ban on creating the floating provision. Ban is only using it is the thing there. So nobody will create that way, I understand. That's the thing. Even today, there is no ban.
Respected Dr. Chakrabarty, ladies and gentlemen, you have heard the banker who can think differently, a banker who can talk with conviction what we don't want to listen. I think it is a beautiful analysis holding mirror to the problem, because all of us discuss something else. Rather than getting into the root cause and the points he made, one very strong point I would say that, where is the equity coming from? I think if there is one answer for this, I think all other problems can be handled afterwards. But we conveniently at times don't understand or ignore, and create problem may be passed on to somebody else who is taking over, who is anyhow there to blame you afterwards. But then the problem is with the system. The problem is with the system, and then I think we need to think very seriously on the issues raised. It is better to look at it. I think he made the problem very simple by saying it is at the initial stage, not at the stage where we are looking at. All of us look at the things when it becomes NPA. If we can look at it a little earlier or at the first stage, I think most of the problems could have been avoided. I think a formal vote of thanks will be proposed by Arun. But let me tell you, sir, that it has been a very, I would say, introspective, instead of saying thought-provoking and all these things. It's introspective to see what went wrong where, rather than finding who made it. I think there is a lot of things one should take from it, and still there is time for us to rectify the whole things. Thank you very much, sir, for that. Now, let me come to the last item, that is coming to the valediction of it. every good thing has to come to an end. So is BANCON 2013 coming to an end after 2 days long deliberation. During these 2 days, we had fruitful sessions on areas which are relevant to the banking industry. I saw delegates interacting with the panelists to gain insight into the areas discussed in respective sessions. That has indeed made the sessions quite lively. In fact, when Dr. Chakrabarty started NPA and he said, you are talking about the bank of future, I thought he's talking about bank of past. But he said, no, I'm talking about the future of the banks. So he gave a very clear context to this whole thing, that when you think of the banks of future, you also think about your future, whether you are going to be there. Very strong point for one, to look at it, to remain relevant in the times to come, because we are all in the organizations which have been built over years, not started by us. It has been handed over to us in trust by people to run and manage, and we owe a responsibility both to the past and to the future to run these institutions in the way in which we are expected to run. The Honorable Finance Minister, Mr. Chidambaram, who inaugurated the conference, exuded confidence in the turnaround of the economy during the second half of the financial year. He also observed that though green shoots are visible, it is still in the very preliminary stage. Honorable Finance Minister pointed out that banking industry is getting increasingly commoditized, with most banks offering very similar propositions. This is an area where banks need to innovate to offer differentiated propositions. During his address, he also offered government support for prudent decisions taken by the bankers according to the circumstances prevalent at that time, which later turned out to be poor decisions. He made a clear distinction between poor decisions and dishonest decisions. This is indeed heartening. Governor RBI, while delivering his address, observed that banking is a business of taking risks, and the bankers should not be averse to take calculated risks, which is the essence of their business. These statements of both Finance Minister and Governor RBI reinforce the confidence of the bankers and encourage them to take prudent and pragmatic decisions. Governor RBI stressed on 5 important aspects which RBI would be concentrating during the next few quarters. They are strengthening of monetary policy framework, strengthening banking structure, broadening and deepening financial markets, financial inclusion, and improving systems' ability to deal with corporate distress. During the various plenary sessions, we had come across various areas where bankers have to focus on during the next few years. Banks are playing a major role in financial inclusion. We have realized that the cost of financial inclusion is quite high. We need to devise innovative ways to reduce the cost of financial inclusion so that our margins are protected. Already some of the banks have developed models to reduce the cost, and we need to build on the scalability to make it cost effective. Banks and NBFCs can also share and work together to serve the bottom of the pyramid. For this, technology is an enabler. Innovations in technology with cost-effective and simple models will help banks to achieve the aim of financial inclusion and serve the mass market efficiently and effectively. In the field of customer service, banks have to graduate themselves to deal with the equanimity, both techno-savvy customers as well as those comfortable with branch banking. Banks also have to seriously consider business implications while viewing customer segments in terms of profitability. We all know that big corporates depend on the market for raising funds, whereas SMEs are the ones which always depend on the banks for their financial needs. This segment needs to be given special treatment because their needs are different and their operations are different. Banks are already focusing on the SME segment a lot. Going forward, banks need to put in more efforts to understand the SMEs more granularly by sector, region, size to better serve them. I've touched upon areas covered by different sessions of the conference. Let me also take this opportunity to highlight contributions made by various stakeholders for making this conference a grand success. As you all know, we have instituted the Innovation Awards during this BANCON. I was overwhelmed to see the response it emanated from the banks. In all, we got 88 applications from 35 banks for this award. The jury was headed by Mrs. Usha Thorat and supported by McKinsey's for screening through the applications. On behalf of the Indian Banks Association, I express my sincere appreciation to the efforts put in by the jury from the process of conceptualization to drawing it to the logical end. I hope these awards will encourage more banks to innovate and come out with novel ideas which help the bank as well as the customers. I appreciate efforts put in by the knowledge partners for designing the framework and sessions of the conference. The gallery shows on both days on digital showcasing, cutting-edge digital innovations implemented by global leaders, customer experience by Disney was also popular with the delegates. I congratulate McKinsey for coming out with this innovative show which added value to this conference. Let me also take this opportunity. Somebody asked me, one of the journalist friends asked me, how are the conferences, BANCON is becoming more and more popular and more attractive. And I said that every BANCON sets a standard for itself. And I have no hesitation in saying BANCON 2013 has set a standard of its own for the people to follow. I had received tremendous feedback from the participants about the way in which it has been carried out meticulously. Let me take this opportunity to appreciate the wholehearted support and the involvement by the host, Bank of India, under the leadership of Mrs. Iyer and her able team. We from IBA never faced any problem for executing the ideas put forward by us, right from conceptualization to implementation. On behalf of the entire participants, let me congratulate and compliment the entire Bank of India team. I know that behind every conference, there is a very silent team of IBA which works. They don't create noise, they're all behind the scene, working day in and day out. I need to, in my capacity as chairman IBA, compliment the entire IBA team led by Dr. K. Ramakrishnan and Rema and the entire team. I would also like to place on record the excellent services rendered by Dr. K. Ramakrishnan as Chief Executive of Indian Banks Association for the last 5 years. A couple of suggestions I thought I should make today is that we have 2 days conference. We need to review the duration of the conference because holding on to the audience till the last moment is a challenge. So we need to think that should the conferences run for 2 days or should the period be reduced a little so that we have the entire audience till the end of the conference. This is a food for thought. Always we think that from here to where. In my career, I once worked in Bank of India and then moved on to Allahabad Bank. So is the BANCON. Next year BANCON will be hosted by Allahabad Bank in Kolkata. Let me, on behalf of the chairperson of Allahabad Bank, extend you all a very warm welcome into Kolkata to see BANCON 2014. Thank you very much.
Thank you, Mr. Kamath, for the concluding remarks. May I request Mr. Kamath to kindly present a small memento to Deputy Governor Dr. Chakrabarty as a token of appreciation. Thank you, sir. May I now request Mr. Arun Srivastav, Executive Director, Bank of India, to kindly propose a vote of thanks.
Honorable Deputy Governor, Reserve Bank of India, Dr. K.C. Chakrabarty. respected Chairman of IBA and Chairman of Punjab National Bank, Mr. K.R. Kamath, the Lady of the Day, Chairperson of Bank of India, Madam Vijay Lakshmi Iyer, fellow bankers, colleagues, invitees, delegates from the banker fraternity. Now the task is well set and cut out for me that the BANCON has come to an end. First of all, I must thank Dr. K.C. Chakrabarty. In his own style, he had taken up the most difficult topic and the most difficult session because it was a post-lunch session. But continuously for about 1 hour and 15 minutes, he kept with his spellbound deliberations, the audience awake and on their toes. And everybody was so participative in the thoughts which he has given. Rather, from the morning, the perspective we had for the bank of the future, it was a bank's perspective. He changed it to the perspective of a regulator, what would be the future of the bank. In his own style, he has emphasized that if we are not taking the lessons from the past and take corrective action in the present day context, our future will be extremely dark. So if we want to be a bank of the future, we have to learn lessons from the past and take corrective actions so that our future is secured and we take a step for the bank of the future. Since the conference comes to an end, I first thank the IBA for giving us the opportunity to the Bank of India to host this conference in 2013. Our sincere and heartfelt thanks to our Honorable Union Finance Minister, Shri P. Chidambaram, for his thought-provoking address and setting out the pace for the proceedings, then followed by some panel discussions, and Dr. Rajan, the Governor, Reserve Bank of India, also gave a timely and sound advice to all the banking fraternity, which was definitely looked forward and would form the basis of our performance in the future. Our sincere thanks to Mr. Kamath and Dr. Ramakrishna, CEO of IBA, for their active guidance and support they gave during the entire period of hosting this conference. I have seen Dr. Ramakrishna coming to our office and is spending time with our volunteers, our organizers, how the event has to be organized on a day-to-day basis, not only on phone calls, but he has spared his valuable time for that job. Our thanks to McKinsey and Company and the knowledge partners for their involvement and support which gave to us and the roadmap set for the conference. The event managers for that conference, Hansa Entertainment, the hotel management, and the people from the press and the electronic media who have covered this event so nicely in these newspapers. Last but not least, I convey the thanks on behalf of the management of Bank of India to the entire team of the volunteers and the organizers who have taken pains for the last 3-4 days to ensure that this conference becomes a grand success, which has now been recently affirmed by none other than the IBA chairman. So thanks to all the delegates, all the participants, all the bankers who made this conference a great success. Thank you and goodbye.